All right, everybody. Today's topic: are we heading into inflation or are we heading into a period of deflation? And what action should we take as investors, depending on what we foresee in the coming period ahead? So, I am not an accountant, tax advisor, financial planner, or anything else. I'm just talking about my perceptions and what I see coming. And I hope you make good decisions based on what you see coming as well. So, if you've been watching any YouTube videos, Ray Dalio's been traveling, speaking on a bunch of different channels and talking about really what's going on with the government, with all the stimulus checks and um, basically bailouts for the coronavirus. And according to that, according to Ray Dalio, we are in the last stages where interest rates are at bottom. They can't go any lower, which the interest rates are what the Fed uses to regulate the speed of the economy. And so now, with interest rates at bottom, the only thing they can do is print money, which we're seeing them print a lot of money. And what's the latest bill is what, 1.9 trillion dollars. Hard to comprehend the numbers, but they're printing a lot of money. And so according to Ray Dalio, we are heading into a period of inflation where asset values will rise because people have more money and the value of money will fall. So if we are heading into a period of inflation, the last thing we want to do is hold a bunch of cash because the value of that cash is going to drop. Okay. However, I was also listening to a book on Audible, The New Great Depression by James Rickards. And in there, he's talking about similar things that are occurring in the economy, but yet he sees us not heading into deflation, but because his prediction is that the economy is going to slow down so rapidly that prices are going to fall because everyone is going to suddenly, even if money's being dumped into the economy, being printed, people are going to become very stingy with it. So people are just going to save and hoard their cash. And because people are hoarding their cash and it's not cycling through the economy, all prices are going to fall. So if we are heading into a period of deflation, like he predicts, then the best thing to hold really is cash, because as prices fall, that cash is going to be more valuable, or we will be able to buy more with that cash. So it is an interesting time, and it is important to try to make predictions of what's going to happen because we need to decide whether we should hold cash, not hold cash. Should we buy assets now thinking they're going up in value, or should we be selling assets thinking they're about to drop in value? All right. So, in from discussions I'm having with people and everything I've read, I've been wrestling with the concept, and I enjoy looking at the economic models and predictions of other people. And the conclusion I've come to is that I think we are heading into an inflationary period. Not only is the economic data fairly good, so the stock market is still rising, investors are still optimistic, and we can predict in the short term that the economy is going to grow. Additionally, we have a lot of money being printed and pumped into the economy. And so, as long as people are still optimistic, I think in general, the population, either they didn't believe the closures were necessary in the first place, or if they did believe the closures were necessary before, then with the number of cases dropping and vaccines going out, I think that group of people is more optimistic about what will come. And so I don't foresee people being tight on their spending, I think the money being dumped into the economy is going to grow the economy in the short term. So, with that, with a bunch of money going into the economy, people spending it freely, we are going to see inflation, especially because the Fed has already said they won't raise interest rates for the next 1 to 2 years. Um, so raising the interest rates is the way that they regulate inflation. And so they have already said they're okay with inflation. So I would expect that inflation is coming. Now, if we have inflation coming, what should we do? And really, why would the government be okay with inflation? Because a lot of times for the general public, you don't want inflation. If you have inflation, then suddenly your dollars aren't worth as much as they were before. Your milk costs more, your mortgage stays the same. But if you're a renter, your rent's going to go up. And so, in a lot of ways, the general public can't afford as much as they used to because their dollars aren't worth as much as they were before. So, the government actually likes inflation because they are constantly borrowing money. And since they are borrowing money at a staggering rate, they need inflation because that debt actually becomes less valuable as there is inflation. So, as we have inflation, the dollar becomes less valuable. And so that debt becomes less valuable, or at least future dollars will be more valuable and you'll be paying that debt with future dollars. Okay, so what should we do if we are heading into a period of inflation? Then the last thing we want to do is sit on cash, right? So if we have a bunch of cash, we want to invest it. The reason we don't want to have cash is because the value of each dollar, as we continue to pump more dollars, print more dollars, put those in the economy, as we have more dollars, the value of each dollar or the buying power of each dollar goes down. Because as people, if you think about it in one person's life, if they suddenly come into more money, the amount of money they're willing to spend for that car or whatever the item is will increase because they suddenly have more money. They're more willing to spend money to get it. And so if they're in competition with other people with money, the sale price of that car or whatever it is people are competing for will go up because the people bidding on it and trying to buy it have more money and are willing to spend more money. All right, so if inflation is coming, we don't want to hold cash. We need to buy assets. And additionally, we should, especially with interest rates being very low, we should buy assets then have debt on those assets. So let's look at a real easy example. I am going to wow you with my art skills. For all of you who don't know it, I was during my years of subbing out when I lived in Oregon, I was a middle school art teacher. So you are about to be amazed. Okay, so let's say we buy this house. If anybody can see that. Aren't you impressed with that? Okay, so we buy a house. We get financing for 75%. Say it's $100,000 house. We get a loan for 75,000. We put 25,000 down. Okay. So with inflation, the value of that house will go up. The debt on the house is going to stay the same, right? It won't change, except that because our future dollars will be more valuable, um, the cost of paying that debt off will go down actually. So let's say after 2 years, and we're not going to have this much inflation, but just for simple numbers, let's say this house now goes to 200,000. Our debt has been paid off a little bit, or it's 70, we'll say 73. And actually, the cost of paying that debt is lower than 73, because instead of, if we were making 10,000 a month, maybe because of the rise in values and rents, we're making 20,000 a month, and our payment on that mortgage is still the same. Okay, so it seems to me that the safe bet, if we are heading into inflation, is to buy assets and carry a mortgage on that asset, or carry debt on that asset. All right, that's my prediction of what's going to happen, and my 2 cents on what the wise move is moving forward. I definitely want to hear what you think. Send me an email, chad@truewealthinvestors.com, or send me a personal message, drop a comment below the video, whatever is easiest for you. I look forward to hearing from you, and we'll talk to you soon.